Hello, 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 everyone. Happy Wednesday. Happy Fed Day. How's everyone doing? Good morning, Patrick. Let me move this box over to the other monitor. There we go. Good morning, John. Good morning, Anissa. Good morning, Jacob. Good morning, Options 22. Good morning, David. Good morning to people in the background. What, do people not celebrate Fed Day? It's a lighter day today, but there's just not a lot of great setups actually, though, in the S&P and NASDAQ. Watching the key thing we'll get into right now. But big news today, unless you're a crude trader, because we got the EAI numbers. So you got to pay attention to that on the crude trade side. But other than that, we had the mortgage information come out, and everything is about not the interest rate decision because it's a pause. It's like at 99%. It's a pause. We're not going to shock the market. We got the Fed press conference. The Fed press conference. That's what matters today, to see, and the market's still pricing in 3 more cuts this year, to see what Powell is alluding to with that. And then we get the rest of Fed speakers on Friday. Like, if you forget, there you go. There's Friday. Starting at 6:15 a.m. all the way through today. You get Fed Speak Fridays. But we're on Wednesday still. Good morning, Royal Palms. So it's going to be all based off the press conference at 2:30 p.m. Eastern Time. The rate decision, remember, is 2 p.m. Eastern Time. So the volatility will come during the press conference. So far today, we got Uber, which had earnings, and it's down 4.3%. You had CrowdStrike, which announced, I think, 500 people layoffs. Disney, which had earnings, up 9.5. That actually triggered a double bottom and is gapping to the second target. So we'll take a look at that too. I don't know what's going on with Arista Networks. Didn't look into that one this morning. But your groups, let's see basic materials. Oh, basic materials is the only one that's negative. The only one that's negative. 10 basis points. So everything else is positive going into the open, with healthcare, industrials, and energy leading the way higher. Fed watching at pause. Still has a pause now for June, only at 70% roughly. Then a cut in July, a cut in September, and a cut in October. So we're going to have to see how that changes post or during and post press conference. Fear and greed, back to greed mode. PE just below 35. Schiller PE. We had AMD yesterday, Supermicro, which was a miss. Uber this morning, Walt Disney, which was a beat, and a pretty decent earning report out of Disney. Theme park revenue up. So, after the close, we got Carvana, DoorDash, but not much after the close. Everything will still be the fallout from the Fed press conference. And tomorrow morning, we have Peloton, Shopify, ConocoPhillips. But nothing's really going to be market moving there. Who else we have coming in? Good morning, Daniel. Good morning, Harold. Good morning, PMG. You're late. What is going on? You're late. So, it just broke down. Gosh darn it. Oh, well. Yesterday, I highlighted the area we were watching for. We got just down to that top area and got the move up yesterday. Was holding. Here's what I was watching. We were holding this very key area, came back down to the key prior resistance, becoming support, tested it, and now we've broken through. So based off of that, unless we can regain this 56.47, 56.48 area as support, that's what I was watching going into the open, but now we're broken below it, so I have to watch for the next setup. Again, if we continue to pull back, 56.08 is very key. Might be quieter trading going into the Fed meeting, but you never know because this administration is always putting out information. So, but now I'm going to be watching for the bigger pullback, and this is still a very key support zone, same one I went over yesterday, 56.08 to 55.91. If you want to fine-tune that a little more, you can go 56.08 to 5600. If you want to give it a little narrower room for what to watch for key support. So, If we can regain 56.47, I'll be paying very close in the 56.61 for a continued trend up breakout play. NASDAQ, again, was watching this 19,900 area, which we're breaking below just now. So I need to see that regained. If not, we still have, again, if you want to tighten up this level going forward for this morning, if it does pull back, we're about 19,750 to 19,780 for very key support. All right, overall, on the daily, we are, let me jump back to the S&P. We are at the top of the rotation zone. That's why I'm keeping a close eye on this area, even if we dip slightly into it. If we really start breaking below this 55.90, then I'm watching the bottom of the rotation zone closer to about 55.40 to 55.50. The NASDAQ, same difference. We're trading right at the top of the rotation zone. If we break below that, then I'm watching closer back to 19,450. And that could be even during the press conference if the markets don't like what Powell has to say. Okay? Because we still do have cycles going down. So far, this isn't that big a pullback correction. I just got a text from Sterling saying issue at work, so he will not be on the live stream. That's what that was. So we wish him well at work. All right. That's where that sits. So if anything comes out during the press conference the market doesn't like, I'm watching closer to the bottom of the rotation zone for both the S&P and the NASDAQ. To the upside, again, if we regain that, I'm watching the very key resistance 57.20, and then if we do, we have the final double target 57.38. But the key magnet price for me next would be 57.80 on the S&P. On the Nasdaq, we already hit that level once, this 20,325 area, 320 area, but above that is 20,504. Those are the target C upside. Weren't those hourly double bottoms on the S&P? This one, you mean? This, I was coming from this peak. Even if you go conservative. And even if you're saying, all right, it was from this peak, it's still going in. The second target is still going through the wicks. That's why I did not treat it as a double bottom. If you're doing this target, that would have definitely ruled out. But if you're saying, okay, this started the move, which you very well could, remember the second target's got to be within the candle bodies. So no, that's why I did not call that out. Okay, Daniel? That's why. Remember the second and third target rule. The Dow, we're back into the very narrow of the rotation zone. If that breaks down, though, I'm watching closer to 40,350 for key support. Again, I'd really be watching the NASDAQ and the S&P for the best setups right now. The Dow's been sort of a mess. There just haven't been a lot of great trading, so we're just going to ignore that because there's nothing to do. The Russell, still holding my key area. Still have the key area. Still have the key area right here. 1982, and the first support I'll be watching this morning is 1996. Key resistance 2025. The VIX still just slightly grinding higher after hitting the 87.5, but nothing substantial. Just a little built-in extra volatility, potential volatility due to the Fed meeting. The DAX actually basing their recent highs. Cycles rolling over, getting out of overbought, but even on a pullback, I'm still watching 23K, which was right around yesterday's low, 22,997 yesterday. 977, sorry. So anywhere in there with a pullback to rotation zone, watching for that to hold. If that doesn't hold, I'll watch for the other side of the rotation zone. But if this does go sideways, I'll be watching for a potential another breakout play higher. The yields, not much to talk about. There is not a lot of great setups in the yields unless we have a breakout or breakdown play. Now, going into the Fed meeting, I'm going to keep an eye if we start really breaking below about 4.3% that we could be putting in a short-term topping pattern. Dollar index, still, this is getting extended and sloppy, but I'm going to pay attention before I take it off. What happens with the dollar today going into after the Fed meeting? Going to pay very close attention to that. If this does break down, we had the live stream yesterday on X with and also on Bob's and Jim's channels, Futures Edge. So hope some of you caught that. That was live yesterday. But again, if we start breaking below 98.50, I'm watching for the pullback. If otherwise, I'm watching for still now it's getting very sloppy inverse head and shoulders. Crude, we had the confirmed percent beat buy yesterday, and then it hit the first target, 60.09 to be exact, but I was looking at 60 and now reacting there. So it's definitely take something off from my perspective because it's against the rotation zone, as we talked about yesterday, and raise up a stop, especially going into the EIA numbers. Again, if we turn around, the next key area is the 60, just above 61, which is the 62.5 and the declining rotation zone. Other than that, if we start breaking down, I'll start watching for another pullback play. Gold, little pullback after hitting the 75 harmonic yesterday, little pullback here. Now we do, just covered this on the live stream yesterday, we do take it to double top territory. Might never ever trigger, but from a longer term perspective, because this is a longer term setup. If this were to trigger, that would be for more of a medium long term, at least possibly a reduction, if not a stop, and then look to reestablish stuff lower. Not saying that will ever potentially trigger. And it could be invalidated before it ever triggers. So that's the only thing. Bigger picture I'm watching there. Other than that, not much. Still, we got the magnet price still to the 87.5. So I'll be watching to see, especially during the press conference, how gold reacts. 34.72 is the next target. Yen, not much to talk about here. Not a lot of great setups right now. There's just not a lot of great setups. Euro, either this breaks down and triggers or it's going to be off the table. Again, still nothing's changed with that. The spiders, we're at the rotation zone right now with a little gap up. So still, we didn't quite fill the gap back on any rally. We still have a gap filled of 563.51. Very key support right around this 557.50 area. If we did sell off 554.50, and then if we broke down from that with the press conference, you're looking at 549 to 550. Other than that, paying attention to yesterday's high. Yesterday's high, 563.35, and then to the gap fill area to see how it reacts there. And if we start moving above that with momentum, then the next key targets, not necessarily for today, but for the rest of the week, are the prior high from last Friday and then the 200, simple, which is coming in right around 573. The Qs, pretty much the same story as I just said with the S&Ps. Very traded yesterday back to the rotation zone. 478. Gap up today. I'm paying attention to yesterday's high, 485.05, for a potential rotation play back up. If the market does not like Powell, what he says, 475.50, and then the major supports coming in about 469. Bitcoin does have a little mini. It's one of the lower probabilities because of this extended sideways move before it forward, but it is valid. It would need a daily close below 93,363 to trigger, and it's still technically against the rotation zone. But that is a technical setup now. That may not trigger, and even if it would not invalidate the 62.5 rule. It would just be a little bigger pullback. Wouldn't even take out the last prior resistance becoming support area. Other than that, still looking for some higher prices in Bitcoin. What else? We had Uber report, little gap down. They did have a beat and a miss on revenue. Going to be watching how they react, though, on any pullback, how they react to the prior Key area pulled back into the daily rotation zone, and this is a prior very major support area. Again, Uber is trying to chip away at this area and make a stronger base up here, so we're going to be keeping an eye on that unless it breaks below 81. Disney did trigger back last Friday, did trigger a double bottom. Okay, and then just sat the last couple of days going into earnings. And this is another clear example of where you want to focus on the first and the second targets, because the third target is beyond the move that's this little move that started it. So if it does, you still have 102.49, but I'm going to be looking at now on any pullback how it reacts to 200 simple, which was right at $100 in that nice round number. So you had to be in this well before the earnings, and that's where it's already gapped up beyond the second target. Other than that, Tesla, nothing's changed. Back to bottom of the rotation zone. The double is still in play, the potential double. Again, nothing yet has triggered there, so nothing's changed from our commentary yesterday. That's really about it. That is about it. Let's just peek at the S&P again. I'm being very patient right now. Very patient. Based off of setups. And still, nothing's changed. If we continue to pull back, still watching closer to that 56.08 area for some key support. If we rally into the open, I need to establish a new foothold back above 56.46 with proving that that can retain support again. Other than that, not much for me to say. Remember, press conference at 2:30 Eastern. So be on your toes. Other than that, watch for any comments out of the administration this morning to see if we get something in there. But don't know unless they start announcing trade deals today. Don't know what will supersede the Fed meeting. So that's where we sit there. I will talk to everyone tomorrow. Bye. Hold on. I was up shorts on Tesla. Then I overtraded and lost. I think that was LOAK. Lost 2K, should have walked away when I was up. In these markets, please don't overtrade. I don't care whether it's Tesla, whatever it is. These markets, they're at a decision point right now. Okay? So when the markets are sort of getting in this pause mode, yes, if you have a valid setup, trade the setup, but don't try to force trades in this. Don't try to force trades. It's not worth it. Wait, it will get a lot more clarity in the next few days. We may have a lot more clarity even after the press conference today. So, wait for the key setups. The market's sitting here trying to decide what it wants to do. You know, the only key thing that I'd sit up and take advanced notice of if it closes back below, like the S&P closes below the breakout level. On a not tested, but closes below it. Because then we could go into some more consolidation congestion. Would not invalidate potential more up moves. Again, I said yesterday, 51.65 is key right now to invalidate any further up moves. Other than that, just be cautious, be safe out there. Trade your setups if you have them. If you don't, no trade is a trade. It's just sitting on your powder waiting for the good setups. And with that, I'll talk to everyone later. Bye for now.